guys, welcome back to Ride On Academia. We are still on our series on the final account of a sole trader. In this particular video, I want to be treating adjustment, okay, where there are adjustments on the information given in the trial balance. Okay, now the end of accounting period adjustment, as you can see on the screen, are changes that are made on entries posted in the ledger accounts. Okay, there are changes made on the entries after these entries have already been entered in the trial balance. Okay, that is after the account has been entered in the trial balance. These entries or these adjustments were made, okay, after those balances were transferred to the trial balance, okay, at the end of the accounting period, in order to ensure that the financial statement shows a true and fair view of the business transaction. So then the reason why we make adjustments is to ensure that the statement of financial position as well as the statement of comprehensive income shows a true and fair view of the business, okay, of the business transaction, and in accordance with the generally accepted accounting principle. All right, now we have the need for adjustment. Okay, as you can see, adjustment become necessary in the sense that when a trial balance is extracted for the purpose of drawing up the financial statement, it becomes expedient, okay, to make adjustment for items not yet dealt with or not properly treated. All right, items that were not dealt with in the ledger or were not properly treated in the ledger, it becomes necessary to treat those items, okay, in the book of accounts prior to the extraction of the trial balance and to be included in the financial statement. Now note that the items to be adjusted, whenever we have an item to be adjusted, it must affect both the statement of comprehensive income and the statement of financial position. Usually every item in the trial balance, okay, every item in the trial balance we either move to the statement of comprehensive income or the statement of financial position. That is, no item in the trial balance can appear on both accounts because it was already adjusted. All right, but when we are making adjustment, that is our additional information, as it is mostly called. All right, when we are making adjustment, it means those information in the additional information must reflect in the statement of comprehensive income as well as the statement of financial position. Okay, that's why it is something to note. All right, so we have the common adjustments, right? We have the common adjustments in the financial position of a sole trader. As you can see, these are the common there are a lot of them. All right, but now I'm just going to be mentioning them. Your closing inventory, as you can see, these are the goods available at the end of the trading period, the goods not yet sold, okay, at the end of the trading period. We have our accrued expenses. Now the accrued expenses, they are expenses that the business has enjoyed but they have not yet paid for them. All right, they have not yet paid for them as at when this account was prepared. We have the prepaid expenses. That's just the opposite of the accrued expenses. Okay, that is the expenses that the business is yet to enjoy but they have already paid for it, so they have paid in advance. All right, so we call them prepayments. Now we have the income received in advance. In this case, the business has received money from customers for services that they are yet to render. All right, they have received money from their customer but they are yet to render those services to the customers. And then we have the accrued income. Okay, now the accrued income, these are money that the business is supposed to receive from customers. In this case, the business has rendered services to the customer but they are yet to receive those income, those payments from their customers, so we call it the accrued income. Okay, then we have our bad debts. Now bad debts are debts that are termed irrecoverable by the business. That is, the business can no longer recover these debts. Sometimes they are called bad or doubtful debt. Okay, bad debts, they are debts that the business can they are no longer that the business has seen that they cannot recover these debts. Maybe the person that the debtor has died or the business has closed up. All right, we have provision for bad debt. Now we are going to be looking at, for the sake of clarity, we're going to be looking at provisions as a whole. We'll be treating these provisions in our next video. Okay, now we have our drawings, a case where the proprietor withdraw goods for personal use. He can withdraw goods or withdraw money, okay, but he withdraws from the business for personal use. Then we refer to them as what? Drawings. Then we have the sales of non-current assets as well as the revaluation, all right, where the value of goods, the value of non-current assets are checked against the market price, all right. Now we're going to be going to the next one. Sorry about that. This is okay. We are going to be looking at this adjustment, okay. We are going to be looking at the adjustment as well as how they are treated in the comprehensive income statement, as well as how they are treated in the statement of financial position. Like I said, every information in the adjustment, that is the statement of financial position, is treated. It will affect both the statement of comprehensive income as well as the statement of financial position, all right. Now this is our closing inventory or closing stock. As you can see, closing stock is deducted from the cost of goods available for sale, all right. That is the closing stock. We deduct it from cost of goods available for sale to get our cost of goods sold. That is in our trading account, all right. We do this in our trading account. Then we treat our closing stock as a current asset in our statement of financial position, all right. Now the next one is the accrued expenses. Where we have accrued expenses in our additional information, which we add it to the expenses that was obtained in the trial balance. We add it to the expenses given in the trial balance, okay, and then we post it to the, when we post to the statement of comprehensive income under expenses, right, that is the profit and loss section, we add accrued expenses to the expenses in the trial balance, okay, because we are trying to see the expenses that was due for the year, okay. So we add the unpaid expenses to the one that was paid for in the trial balance to get our total expenses, all right. And then we treat these accrued expenses, that is the expense that was not yet paid, okay, that's why they are called accrued expenses. We treat them as a liability, so we are owing. When we get to the statement of financial position, we treat them as a current liability. Now our prepaid expenses, we deduct them from the expenses given, okay, because we have not yet enjoyed that service for the year. What we try to do is that we try to measure our expenses and our income for the year, okay. So an expense that was not yet enjoyed for the year, we have to deduct it. This prepayment payment was made, but the services was not yet enjoyed, okay. So we have to deduct that amount that was paid from the general expenses given in the trial balance, all right. We are deducting that amount, and then when we get to the financial position, we treat it as a current asset, okay. In that case, they are owing us, okay. The people that we have paid are owing because they have not yet rendered their services to us and they have not yet returned the money back, so they are like a debtor to us, okay. So we treat it as a current asset. Now the income received in advance. Income received, like we said, it means you have received this income from the customer in this case, but you are yet to render that services to the customer. So you deduct from the total income received as shown in your trial balance, as you can see on the screen, and then we treat this as a current liability in our statement of financial position, all right. We go to the accrued income. These are income that you have rendered services, right, but you are yet to be paid. That is, that money is supposed to be paid that year because you rendered that service that year, right. So we are going to be assuming, now this is what we call the accrual basis, right. So we are going to be recognizing this income even though we have not yet received it. We are going to be we'll be adding it to the actual income shown in the trial balance, and then we'll be treating it as a current asset in our statement of financial position. So every amount that is due to the business, which although it's not yet paid, is due to us, we're treating it as a current asset, all right. And then we have the bad debt written off. In the case where a business writes off a debt, right, where we write off a debt, that is, we term the debt as irrecoverable. What we do is that we treat that debt in that current year, all right, that current year where this debt was written off, we treat it as an expense in the statement of comprehensive income. That is the very year this debt was written off, we treat it as an expense, okay. And then since it was given in the additional information, like I said, it will be affecting both sides, okay. If it was just in the trial balance alone, we'll treat it as an expenses, and then that's just it. But because it is coming in the additional information, we'll treat it as both an expenses, and then we'll deduct it from the total debtors, okay, because bad debt will reduce the amount that we are expecting from our debtors, okay. We'll treat it as we reduce it from the total debtors in in the statement of financial position, that is the debtors, all right. We reduce it from our total debtors. Now we have drawings. Like I said, drawings can both be cash withdrawn or goods withdrawn. Okay, now the goods withdrawn reflects in the statement of comprehensive income, right? It is deducted from purchases. As you can see, when we withdraw goods, we deduct it from the goods purchased for the year, all right, to arrive at our net purchase. That is, if we have goods that was withdrawn, we deduct it from the purchases, all right. That is, if this information was coming in our additional information, you have to take note of this. It means this is coming in our additional information. Okay, it is different from the drawings in the trial balance, all right. Now when we go to this statement of financial position, we'll be considering the cash drawings. Now the cash drawings appears in the statement of financial position. It is deducted from the cash, the total cash in the statement of financial position. That is, if cash was withdrawn, then we reduce that cash drawing from the cash amount in the statement of financial position, right? And then when we get to the total drawing in that same statement of financial position, we less the total drawing, in this case both the goods and the cash. As you can see, cash does not appear in comprehensive, it only appears in the financial position, while the goods appears in the comprehensive, right? Now in that same statement of financial position, we are going to be deducting the total drawings. In this case, that is the cash. If there is a cash drawing and if there is a goods withdrawn, we deduct the total drawing from capital, all right. We always reduce drawings from capital in the statement of financial position, just the same way that we do when drawings only appear in the trial balance. We only deduct that drawings from capital, all right. In this case, drawing appeared in additional information, then we begin to check if it is a cash drawing or a goods drawing. Okay, if it is goods drawing, then it will appear both in comprehensive as well as financial position. But if it is a cash drawing, it will only appear here. We reduce from cash and then we reduce from capital, all right. So with this, we've come to the end of adjustments. Like I said, in our next video, we're going to be looking at provisions. Please don't forget to subscribe to our channel, like this video, comment if you have any confusion. Let's see you in the comment section. Follow us, click the notification button. We'll see you in our next class. Thank you.